Hi everybody, welcome to the Attract Capital webinar series. Janine here with David Barnett, CEO. Today we're going to be talking about mezzanine debt repayment strategies. So Dave, before we get to repaying the loan, what is the standard maturity and term for these mezzanine loans?
Great question, Janine. So the standard maturity to set the table is generally 5 years.
Okay.
And their terms are 5 years, and the repayment profile is interest only, so you don't make any loan payments over that 5-year period. Or if you make any payments, it's a very light repayment, but most of it in a mezzanine loan is paid on the back end, and hence it's called a bullet maturity.
Okay, so then this means, unlike a bank loan, the principal payments are not required. That sounds like a really good deal.
It is a really good deal that more people need to know about, because when you're using mezzanine debt to fund an acquisition or to fund growth, not paying back that loan has an enormous value to you, because you can hold on to your cash, you can reinvest it in the business, you can use it to fund other projects. So it really extends the capital runway that a business has, and it's very, very vital in the first 2, 3, 4 years of closing an acquisition or funding a strategic growth project to be able to have as much capital in the business and not have to pay it back to your lender. So it's a vital, vital thing, and I think it's absolutely, essential when you're doing these types of things.
Absolutely. And then how do you advise your clients on mezzanine debt?
So everybody looks at that and says, well, I have to pay back this big loan at the end of 5 years, and they're looking at their cash flow at the time that they raise the loan, but they're not looking at the cash flow that will grow over time. So they need to look more at future cash flow. Mm-hmm. So if they start off at 2 million of EBITDA, by year 3 they might be at 4 million of EBITDA, and then they might be at 5 million of EBITDA. So it's a lot easier for them to pay the loan, because the size of the company is going to grow. So you really need to focus more on future cash flow. And also, most mezzanine debt gets repaid through a refinancing, because as the company grows, the balance sheet grows. As the balance sheet grows, it's easier for the company to attract conventional bank financing, and usually conventional bank financing is the source of refinancing for a mezzanine loan, not the cash flow from the business. The cash flow for the business might pay down a portion of it, but usually there's a refinancing event.
So can you explain the types of refinancing?
Sure. So it could be a partial refinancing, Janine, from a bank. It could be a full refinancing from a bank, or it could also be if the company is sold at the end of the term or about close to the end of the term of the mezzanine loan, then it will be refinanced through the new buyer's capital provider. So it's refinanced either in full, in part by a bank, or it's refinanced through the sale of the company, and that's usually how it goes. So it's more like thinking about you're going to embark on this big journey to build the value of the company, and then once the value of the company is grown by year 5, it's easier to attract the financing to take out the loan that you put into the company on the front end.
Okay, and then I think our listeners would love to know what the most common refinancing is.
Well, the most common in terms of the time frame is usually, if the deal is successful in the first year or 2, then I would say by the 3rd year, you're refinancing that mezzanine lender with a bank lender in order to take it out, in order to reduce your interest rate and to have more conventional pricing on your debt. I'd say it's 2 to 3 years, but there's all sorts of interesting creative takeout options for a mezzanine loan. So if you do have any questions on it, feel free to call me. You can ask for Janine. She knows a lot about it as well. And we deal with these types of questions all day long, so we'd be happy to provide some free advice to you.
All right, there you have it. Thank you so much for tuning in. We'll see you soon.